Hello there. This is my first video in my trading video journal. I'm studying ICT trading framework, and since I didn't see too many people using it on crypto market, I decided to make my own studies and test ICT on crypto, whether it works, how it works, whether it helps us to identify opportunities according to basic ICT models, or if it doesn't, then I would like to see how we can adjust ICT framework to crypto. So right now we see a trade setup. This is Ethereum. Ethereum is ranging for the past couple of days, and the premise of ICT framework is that each time the price progresses out of the range, basically attacks the stop losses, either of shorts here, buy side liquidity above this wick, or of longs here below this wick. So if the price rises up, I'm prepared for a potential short. If the price goes down, I'm prepared for a potential long. Now I'm recording this part of the video already after the day progressed, so let's see how it went. Now what we want to see is a price making a local high, something like that. Local high, low, and this high being breached. Now, if this happens and there will be a gap formed, then this gap will be a long opportunity. Or another possibility is that the price keeps falling and we close the gaps here. If this local high doesn't form, then we simply don't have a trade setup. If we continue lower, then we can watch for those gaps to close first. Very interesting. So far, we have a mild bounce, small bounce, but no gaps forming in the process. You see, every candle has wicks on either sides of it. So no gaps forming so far. It doesn't look like the price is going to stop here. It looks like the price wants to continue down because we're not creating gaps on the bounce. On the contrary, we are creating gaps on the fall. The new gap formed here. Right here. So on the contrary, if the price returns here, that could be a short opportunity. I'm not gonna do it right now. I'm not really prepared for it, but it's just a note for myself. Okay, our next target for a reversal is the gap here, a 1 minute gap, 1 minute time frame gap, this red line. Okay, so far it looks like we're bouncing from the order block exactly to the send. Let's see if we are creating a local high here, then local low, and a higher high. Okay, we've got ourselves our next attempt at creating a trade setup. So we have a gap here, which might be closed right now. We have a low and a high. Now we have to breach that high. if we are closing this gap without creating a higher high, then I would say there is no trade set up. If we break out now and then return into this gap, this is our trade setup. This is our long entry. Alright, looks like we've got ourselves a long setup. Once the price returns into this fair value gap, this is our potential long entry. Now let's check what's the risk to reward. 36.36%, okay. 2 to 1. The first take profit level, I would say, would be to breach these highs and to close this gap. So this would be the TP1. The second take profit level would be to get to the 0.5 of the range from the high to the low, and to close this gap. Now we just have to wait and see if the price returns back here. I will not be entering a trade in this gap, because I've seen many times that this gap is first closed, the price wanders around, then it goes down and closes the last gap. So I will wait for this gap to be closed. So we can see that take profit 1 and take profit 2 are already reached. However, we didn't have a chance to enter this trade, at least according to a regular rules, when the price should return back to close the gap, either this one or that one. Now let's see how it proceeds, and well, we'll see what we can learn from it. Either it will still return and go higher, or it will return and go lower, and we will learn that basically we should find other ways to enter the trade without waiting for the gap to close. Let's wait and see. Alright, we can see that the price is returning back down, but what I'm thinking now is that this long setup is no longer good. I'll explain why. Let's change to the 15-minute chart. On a 15-minute, we ranged, broke down, took out the sell side liquidity, bounced off of the order block on a higher time frame, order block here. Now when we bounced, we closed this 15-minute gap here between this candle and this candle. So this actually could be a good short opportunity. Now why am I saying that maybe right now, if the price goes down back here to the gap that is still open, why it might not be good opportunity to long is because it simply can continue to go down, because the overall trend, although we are ranging, overall trend is of lower highs and now lower lows. So we are basically trending down. So, and trying to enter a long here could potentially be a trade against the trend. But let's see. We still want to observe how this market operates and whether the proposed ideas of ICT stand true also for the crypto market. So let's continue to observe. Another possibility that we can entertain, check here, is not to take the trade immediately on the first candle that goes into this fair value gap, but to wait whether the price goes down and takes out this low, because anyone who is entering longs here potentially has stop losses placed here, which would be taken out by a candle just by a wick down. Then, for the future, this structure will create a double bottom, both on 3-minute chart, on 5-minute chart, even on 15-minute chart. It will be a double bottom from which we can bounce higher, let's say somewhere in the middle of this range, or maybe even taking out these highs. And then this double bottom will be the target for the next run on liquidity. So what I'm suggesting here is, instead of jumping again into trade here directly, to wait until this low is being taken out, reverses, and enter the trade then. All right, so the price reached below. Very nice. It closed the gap. It went below this wick. Let's see if it continues down to take out also this low. Almost. Almost, huh? It didn't take out this low. Very interesting. Well, at least so far, who knows? Maybe there are traders like me that were waiting for this gap to close, to take in, to enter the long. So now they entered. They're placing their stop losses underneath this wick or this wick. Maybe on the next candle we're just gonna smash through it to take them all out. Okay, I still didn't enter the trade. This is my first video. I don't want to rush it. I'm doing it mostly to gather observations on how the market operates and whether ICT concepts are actually applicable to crypto market. Additionally, in about 10 minutes, the New York session is opening. So I want to see usually what kind of volatility is coming in. It could be that during the New York session, we will go down to take out both of these lows. Okay, looks like it's reaching for that liquidity below these two bottoms. Let's see if it bounces from there or if it just continues straight down. On my other screen I'm observing the Bitcoin chart, and on Bitcoin we still didn't take out this low, so perhaps we're still gonna go down lower. So as predicted, we bounced off of an order block. We created these fair value gaps on 1 minute chart, but we didn't return to them until we actually hit my take profit 1 and take profit 2 levels. We even overshot it. We closed this gap, and only then we returned to close the original gaps where we would enter trades according to ICT trade setups. Now, if we would place our stop loss below this wick here, and of course we would be taken out by this move down. So before all that happened, I predicted that that could be a scenario, that return down here would create a double bottom, which many traders view as a legitimate signal to go long, especially here. Bounces here on the second touch. Inexperienced traders are entering their longs here, and only then their stops are being taken out. Once, up, twice. Now again we are creating fair value gap here on the 1 minute chart. We just rocket up. So once again, just like here and here, we didn't have a chance to enter a long if we are waiting for this gap to close. So I guess these are the observations for today. I will keep recording for later to see how this session progresses and where this actually goes. My current view is that we will take out this high, and maybe we will go up here, something like that. Maybe. But in any case, that's what I learned about ICT today. That if you are always waiting for the gaps to close, it could be too late to enter a trade. So the algorithms are already stacked against us. If we're entering the trades here or here, placing a stop loss below this wick, we would be taken out. So we have to take this information into account. The algos are already updated to play against us, against this particular trading setup. Okay. So let's summarize what did I learn on this first session. Well, first of all, what did I do right? I did identify correctly the potential reversal level. So that was our first target, this sell side liquidity below this wick. Price initially went below it. Second, I also correctly identified this lower level where price might potentially reverse. This was this order block, and these two fair value gaps inside of it. And indeed, on this first bounce, price came here and bounced off the order block. So I'd say correct price reversal level. That was done well. Next, I also correctly identified a potential take profit levels. Yeah, they were based off fair value gaps on, I think it was 1 minute chart or 3 minute chart. Yeah, on different time frames, there were different gaps. So this one of them. This was the second one. This was identified, but I didn't place emphasis on it as a take profit level because I preferred to, let's say, to take profits earlier, mostly in the middle of the range, 0.5 level, from the range high to range low. So take profits levels were also identified correctly. Third thing that I also correctly identified was this potential double bottom, which will be taken out before the price continues up. Yeah, it was predicted during the recording while price was still progressing here. I didn't take any trades based on this information, but it's nice to see that I could identify this scenario as a potential play out. It did indeed play out exactly. Future potential scenario. Okay, now this particular scenario is not a model ICT trade setup, but since I'm still in the middle of the studies, I guess I will get to the point where ICT also talks about that, because yeah, he does talk about relative equal lows or relative equal highs that often are being taken out by the market. So there is like similar concept that he talks about. Okay, next, what did I do wrong? What did I do wrong? I didn't do a higher time frame analysis before that. Before I started recording this session and was even considering entering trades. Because it's important, because the model trade setups, for example, waiting for a reversal and then waiting for a gap to fill and entering here, it's a valid trade setup, but it has to be viewed within a context of a overall bigger picture. Like the narrative has to be understood there. Why are we ranging here? What kind of goals the price achieved here? Which players were already taking out, and where the price could head next. So yeah, I did identify the two potential scenarios of price reversing either at the top of the range or at the bottom of the range, but I didn't really do an in-depth analysis of larger picture. So this is a note for myself to do it before the next session. And next thing, I also didn't take into account, well, not really, the intraday sessions. I even have already an indicator set up. So we can divide the day, the 24 hours, into 3 sessions. The Asian session in yellow, the London session in red, and New York session in green. What I already learned before, is that there is always a potential that each new session will play against the range of the previous session. So for example, here Asia established a range. This is range low, this is range high. London session took out the range low of Asia and established its own range high and range low. Now see how beautiful it is. London established this double bottom. As soon as New York session started, it took out the range low of London session. Then it progressed higher. When we are looking at the Bitcoin chart, this is Bitcoin. Let's return back to that place and put it on 5-minute chart. So this is the same day, Asia session, London session, took out Asia one time, then went back, then second time, and now on Bitcoin chart, this double bottom was formed, but it was not breached until later. So on Bitcoin, the algos played it a bit differently. The price went up higher to take out London high, these relative equal highs. Then it returned, it also took out the Asia session high here, the second time here. And then only in the afternoon it took out London low and consolidated here. So while progressing during the day, I did note that New York session might take out these lows, but I didn't view the whole day from the perspective of sessions. I could have acted earlier also here. So where is my note? Lack of HTF analysis and bias. Didn't take into account intraday sessions. And the third thing, I was kind of looking at Ethereum and at Bitcoin charts in parallel. It was not recorded here, but on my second screen I'm always having a Bitcoin chart open. So I was kind of expecting that Ethereum will be following Bitcoin. And what I did see is that it's not actually precise, especially when we are talking about scalps, about low percentage trades. On Ethereum, this low was taken out. On Bitcoin, this low was not taken out here. So I was expecting to act upon Ethereum based on performance of Bitcoin, and now I see that it's actually a wrong premise. So yes, they kind of work in tandem. Sometimes Ethereum is following Bitcoin, sometimes Ethereum is front-running Bitcoin. But when we are talking about high precision trade entries, we cannot rely on this correlation between the two. So it's still important and interesting to observe how both of them are working, but we certainly cannot rely on the precise correlation. So wrong assumption about ETH
and BTC precise correlation. All right, and what else did I learn today? Well, at least on the surface, I would say that the premise that ICT has is bringing, the premise of his framework is that the markets are being moved by algorithms that are always hunting liquidity. It happens in different forms, but well, as the song goes, there is always a trap somewhere. So there's always some kind of trap in the markets, and inexperienced traders are falling into those traps, and the algos are hunting their liquidity, hunting their stop losses, or manipulating them into entering trades where it's least favorable for the traders. So this premise is correct, but the model entry into trades where basically price is breaching, for example, sell side liquidity and creating these gaps on the bounce. In other markets like Forex or stock indices, these gaps are often being filled, and from here the price rises and it goes to these take profit levels of the gaps created on the decline. But it doesn't happen every time, or at least didn't happen at this session on Ethereum chart. Now, one thing that I could say is that perhaps if we would be looking on another time frame, then maybe there are some gaps that did get filled, or at least filled partially. For example, here we could say that removing this line, we could say that this is the gap that formed on the 5-minute chart between this candle and this candle, and then on this candle, well, there was a slight breach. The low of this candle was lower than this candle. This one was 1652.85 and this one was 1652.65. So as ICT suggests, you can place your limit order directly beneath this candle. So in this case that would work, but then the risk reward would be skewed. It wouldn't be a very profitable trade. If we're talking about TP1 here at this level, then this is a risk reward of 0.66. Horrible. To take profit to 2, well, slightly better, 1.2, but still we don't want to enter trades with risk reward below, let's say 2 to 1. So in this case, what I did learn is that I cannot expect a model trade entry to repeat itself on Ethereum or on Bitcoin chart every time. I have to investigate further and observe how the market works now to find the optimal entries. Perhaps just seeing the bounce of order block was enough to enter already simply on the next candle in any place here. Perhaps that's just another idea that I can entertain and try out. So, crypto market hunts liquidity, that's correct. The model trade entry does not repeat itself on ETH chart. All right, next thing that I did learn also was that there are more trade setups during the day that did happen, but I didn't really notice them. Why? Because I was not looking for them. I was looking for one particular trade setup of price going below a previous week, reversing, creating higher high, and then reversing into the fair value gap and going up. This didn't happen, but other things out of the framework of ICT did happen here. For example, on this rise, here we can see that the gap got created between this candle and this candle, and the price indeed returned there. Price went up, returned into this gap to fill it, and it filled it completely, almost completely. So it could be another trade setup that I could take from here to take it up to close this gap. Next thing that I noticed only later, that there was a gap here on the 15-minute chart, which got closed on this wick. This is the gap. And it got perfectly closed on this wick. So this could be another short setup, especially seeing, as I mentioned also in the video, that we are in a declining market. Once the price started to move up quickly here, there was another opportunity here. Although it was already a bit too late into the pump, still we created a gap between this candle and this candle, and on the next 5-minute candle we went down and closed it. This could be another long entry and targeting somewhere above this wick, maybe above this wicks, and indeed that did happen here. So very interesting observation that ICT made in one of his videos is that if you know what to look for, then you can find it everywhere in the charts. But if you do not know what to look for, then you're simply dismissing the information presented to you in the chart. Since I was looking for one particular thing, I did dismiss other trade entry opportunities during this session. But now, when I'm aware of it, then I will know what to look for. Even if the thing that I was expecting to happen did not happen, I will be more open to look for another trade setups and another opportunities while the chart progresses. So I learned that more trading or trade setups are forming during the session. Yeah, be prepared to look for them. Well, I guess that's enough for this session. It's already a long video, but I must say that it's very encouraging to see that this kind of study that I'm performing, recording my own analysis, recording my own observations, then thinking about them for a day, analyzing doing annotations for myself. It does really help to understand how this market works. It does help me understand how my mind is working, like what I'm doing wrong, what I'm doing right, and how I'm learning. So, thanks for watching. If anyone is watching this video, I'm sure that at some point there will be, but for now it's just my own diary. All right, till next time. See you in the next video.